section. Okay, so we're welcome to our 2026 section. It's been a very great run in 2025, and we pray that 2026 will be far, far better by God's grace, and inshallah, it will be far, far better for us all by God's grace. So,
Amen.
everything we do or everything that we dwell on, it's knowing the type of trader you are. That is where everything, the base of everything falls on, knowing the type of trader you are. So the of trader, type of trader you are. So basically, due to the size of our equity currently, all of us will fall under two categories, be it a scalper, an intraday trader, an intraday trader, an intraday trader. So this is the first thing you must know. Know the type of trader you are. There's a common saying among the Socrates. They say an unexamined life is not worth living. So you must examine the type of trader you are. The type of trader you are. So now if you're a scalper, where is your time? The next thing you move into is your time frame of operation. As a scalper, you start your analysis from 4 hour down to 1 hour, and then entry on 30 minutes slash 15 minutes. That is as a scalper. Why as an intraday trader, you start your analysis from 1D down to 4H down to 1 hour slash 30 minutes for entry. So these are the things you map out as an intraday trader and as a scalper. So the thing is that this is in alignment with our 4 hour, 5 minutes concept. So it is a refinement of this strategy that brought about that 4 hour and 5 minute entry strategy. So another refined part of that is daily and 1 hour. So if you spot a POI on daily, you go to 1 hour, you look for a shift in market structure, but we don't use that mostly because of the size, because our focus mainly is on gold, and the stop loss size on gold is always wide, so we always want to minimize it. So this is just like walking us through for those that have been here, and this is just like laying a foundation for those that just joined us recently, and to prepare your mind ahead of what we'll be having from next week. And then there's something I wanted to correct. Please, what happened on the WhatsApp channel today? Please, I don't really like it. Some of us we we lost what the group is meant for, and I've spoken to the person that initiated that and is no more in the group. So please, let's take why we are here serious. Sorry, excuse me. Let's take why we're here serious. So the next thing is, after all this, let's take for example the scalper time frame now, or you're a scalper. What are the things you should watch out for? What are the things you watch out for in scalping? So let me put this here. So let's say for a scalper now, for a scalper, your 4 hour is for market structure plus POI identification plus rejection of zone. And then for your 1 hour, what you look for in the 1 hour is your BMS, a body BMS. For those that have gotten the past class video, you might have seen some of these things being treated. Then why for your 30 minutes? Your 30 minutes slash 15 minutes is for your entry. So your entry might be an engulfing order block or the concept of OB. So that is what you look out for as a scalper. And then if you're talking about the intraday too, it's the same thing. It's the same thing, it's just that your time frame of operation changes. Your time frame of operation changes. So let me copy this. For an intraday, y, so here changes to 1D, y here changes to 4H, y this, ah, y this changes to 1H slash 30 minutes. Sorry, I don't know if you guys are you following up?
Yes,
This is
sir.
this is ought to be like an interactive. I've not started doing.
Yes, we are following up.
Who am I from out? Are we following up?
Yes, we are following up.
Yes, sir.
Following up.
You are following.
Okay, so this is where you establish all your foundation for analysis. So you don't just jump to do analysis. So you start from here to do start from. So first and foremost, like I told us, this is like a refreshing course. And for those that have been here, why this is like a foundation for those that just recently joined. So let's take the scalping into consideration. Let's take the scalping into consideration. So our first time frame of operation is the 4 hour. The 4 hour. So let's see. So this is the 4 hours. So this is BTC. We have all been waiting for BTC. And if you remember, the other POI I sent on BTC was around here, and you can see where BTC has got into. Only that we don't have a clear marking on where to
Sorry, boss.
enter.
I was copying those things. It looks like you deleted. Okay, maybe I'll catch up. Maybe I'll rewatch this thing. Let's go on. Yes, go.
You say you are copying this?
Yeah, I was copying, but it's fine. I will rewatch the video later and
Okay, yeah, it's
copy them out.
recorded. So you get the recorded
Yeah,
section.
I'll rewatch.
You get the recorded section. So let's go to 4 hour. So on the 4 hour as a scalper now, what we are aiming for, is to establish our market structure. So let's go to 4 hour. Let's go to 4 hour. So let me just pin this down here. So there are two ways we can identify market structure. There are two easy ways we can identify market structure. If you are conversant to the chart, you can just look at the chart and then you know where it's heading to. If you are not, you can use your line chart. The line chart is very valid in identification of market structure. So it's very clear to identify. So on the line chart, you get something like this. You get something like this on your line chart. So it might not be as accurate as this schematic diagram that I'm using here, but at least from the chart, you're able to know that this is an uptrend, like the one we have on 4 hour over here. You have this region over here. So you can see that from here, this is an uptrend, similar to what we have here. So the same thing, if you are having a downtrend on your line chart, this is how it will appear to be. So if you are the type that have a trading journal or a trading rule, leave that system for me. I want to do something with it. if you are the type that have a trading journal like me, where you have to first mark if everything is in alignment before you trade. Let me take this out. The first thing you do is your market structure. Since you are scalping, your market structure here, it's bullish. It's bullish. So you are able to identify that. So if your market structure is bullish, the next thing you ask yourself is, what POI are you looking for? So now the first POI you look for in a bullish market is a support zone. A support zone. So now, we have already established that our support zone, it's a V shape, a V shape, a V shape on line chart, V shape on line charts, and then on the candlestick, on candlestick, it is a sell candle plus buy candle. It is a sell candle plus a buy candle. So these are the two things you use to confirm both POI and market structure. You see how valid the line chart will always grant whatsoever you are looking for. It's always valid for you to use. Let me increase this to, I think, 16. This to 16. So like we can see on BTC currently from the 4-hour. So this is our point of interest. So if we are to identify the support zone, what we mean by a V shape is something like this. So this is a support zone. This is a support zone over here. You have a support zone. Give me a minute, please. What is happening? Why is this thing coming up? Wow. Please give me a minute. I'm trying to sort out something. Okay, when we talk about support zones, we are talking about areas like this on your chart. Areas like this on your chart. So this is a support zone where you have a V shape. So this is a support zone. Let me see this one. Okay, good. So now here's a support zone. So if you continue marking zones like this, you tend to have multiple support zones in the market. So remember on your 4-hour, you're looking for market structure, POI identification, plus rejection of zone. So we have been able to identify one support zone. This is another support zone here, a V-shaped area. A V-shaped area. So we label this to a support zone. So that's how you can continue marking. You can mark this, you can mark this. So that it's not only using the line charts for a proper identification of support zone. You also use your candlestick to confirm if these zones you have marked as V-shape are valid. So now if I should come to the candlestick pattern, those regions or those areas where I have marked as a support zone, I want to see a sell candle plus a buy candle on those zones. So that is the confirmation I want to see once I come to those zones. A sell candle plus a buy candle. So let me give this a blue color. Please, if you have any question or any area of confusion, please let's indicate before we move far. So once I come to this zone, all I want to see is a buy candle and a sell candle and a buy candle, sorry, on this my zone that I call a support zone. So that is what validates it as a support zone. Definitely these candles will have wick attached to them. They will have wicks attached to them. So let's change back to our candlestick pattern. So look closely to the areas where we call the support zone. So this was the first one here. You can see this sell candle, even though it has a long wick, and a buy candle, it makes up this first zone. And then you see this one too, it makes up this second zone. So now I want to show us the importance of using the line chart. So a lot of people will mark this area here as a support zone. As a support zone, that is this area, this sharp edge area. But if you turn to the candlestick pattern, you can see that there is no sell candle and a buy candle. So this zone is not valid. So that is why you must use a line chart to make confirmation, and also use the candlestick to also make confirmation. So now on the 4 hour, we're able to identify our market structure. Let me take it out. So on 4 hour, we have identified market structure, which is bullish. We have identified POI, which is the support zone, the exit. So now the next thing we have to identify is rejection of POI, the rejection of POI. So it's very easy. So when we talk about rejection candle, we want price, since it's a support zone, we want price closing above the zone. We want price closing above the zone. So let's say this is our support zone. I want price to come back to this zone and then close above it. So let's just extend this zone over here. So when we talk about rejection, it's all about price closing above your support zone. It's all about price closing above your support zone. So the manner or the type of candle it uses to close, it's not of importance. What you just want is the rejection forming. The rejection forming. So once you have a candle, be it a bullish candle or a bearish candle, that form in this manner or after this mannerism, we call it a rejection candle. So if you look at this region over here, let me take this out. Let me take this out. So if you look at this place, we call it a support zone. Let me make an adjustment back. So if you look at this region here, you can see that this bearish candle closed above it. What we mean by closing above it is that the body of the candle is above your support zone. Is above your support zone. So that's what we mean by a rejection candle. You can see that this is a candle, but the body is above. So coming to this this support zone again, you can see that this is a rejection candle. This red bullish candle, it's a rejection candle. We call it a rejection candle because the body of the candle is above. I don't know if you guys are following up. Are you with me?
Yes, sir.
Okay, okay. So that's what we mean by a rejection candle. So first of all, you must be able to identify these things. You must be able to identify these things in the market. Without them, your analysis is nowhere near to a win trade. It's to a win trade. I don't actually know what's happening on the reef. Seems I want to start the year with a lot of manipulation for us. But let's just keep calm. By Monday and so beyond, we'll actually get clear trades to take. So there are a lot of things I want us to settle out tonight. So this is just like a foundational class to prepare us uh, ahead of what we'll be expecting. Okay, someone is asking, must rejection candle be on the 4-hour candle? Yes, these are all the things you must watch out for on 4 hours. On 4 hours, except you see all these things on 4 hours, you are not permitted to go to another time frame. So all this must have, each time frame has its operational guidelines. You don't just come on any time frame and then click, 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 click. No, you must have use the 4 hour for directional bias. If you check the daily on BTC, you can see that is bullish too. And then the 4 hour confirms that by creating structures that complement the bullish move on BTC. So that is that on the aspect of this. So from Monday, we are starting properly on this. So this is just to give us like a guideline of what we will be expecting. So we set our mind to it. So there are other issues I would love to address. The issue of risk management. The issue of risk management is a very important concept. It's a very important concept. So if you are trading gold, remember, if we are trading other volatility indices, we look for PDT. So PDT simply stands for pay the trader. So there is two things I want us to put our mind on, two vital things I want us to put our mind on. It's not every trade that will hit take profit. It's not every trade that you will have a full TP. Some will have stop loss, some you go with break even. So as a trader, your main job is to make sure that in all situations, your capital is always protected. Your capital is always protected. That is one thing I will let us know. So now we introduce the concept of PDT to help a lot of people. So now the concept of PDT stands that at 1:3, you close one position. And how do we do that? How do we do that? Take for example now, I want to, after all my calculation, I want to reach 1.0 lot size. 1.0 lot size. What I will do is that I'll open two positions, but not on 1.0. 0.5 on one position and then 0.5 on another position, depending on the size of your account. So if you want to use 4 standard lot size, you divide it into two. Two lot size, like having two positions. So now, if the trade you entered has moved, let me bring that back. If the trade you have entered has moved 1:3, you close one of the 0.5. You close one of the 0.5. That is what we mean by PDT, paying the trader. The truth is that the market is not our father's backyard. The market is not our father's backyard. So we must find a way to enrich ourselves instead of enriching the market. So at 1:3 risk management, at 1:3 risk reward ratio, sorry, you close one of the 0.5 or one of the positions you have entered. And then for the other one, you break even. What I mean by break even is that you place your stop loss close to the entry or even at the entry, and then you let it run. If that position should reverse, your account is secured with something on top. But if it gets to TP, good and fine. Actually, a lot of people will say, what if you leave the two positions, let them run to profit, blah, 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 stuff like that. Yes, but the essence of trading is that it builds you financial discipline. That is one thing you must know. Trading builds you financial discipline, and then you are able to calculate logically, not following emotional or chasing the market emotionally. I don't know if you guys are getting what I'm trying to say. So now on volatility pairs on BTC, no volatility pairs alone. Once you get to 1:3, you close one position, let the other run. And there's power in compounding. There's what is known as compounding effect. There's this particular book I read, Atomic Habits, I think by James Harlan. I will recommend we get that book to read. The thing is that in that book, I was able to learn the power of compounding, little things over a long period of time. Imagine you are able to compound 1:3 for 10 days. That is 1:30. And imagine each one ratio is worth $5. So $15 times 30, we know how much that is. Or if you do the proper calculation, you know how much that is. So let's not look at it that 1:3 is small. It will help you build yourself over time and your confidence level will increase. So that is on volatility pairs. Once it comes to gold, BTC, or Ethereum, once you are able to move 100 pips, you apply PDT, closing one position, keep the stop loss and allow the other position to run to either TP, or if it wants to reverse, it gives you break even. So that is just the two concepts I want us to apply this year in our trading. Like the VIX 10 of today, we're waiting for it to get to 1:3. We close one position, let the rest run. I think got to 1:2.57 before the reversal it started making. And one thing is that there's no holy grail in this industry. So loss is part of the game. Winning is part of the game. Where you come in as a trader is being able to control how much you lose and how much you gain. So that is the concept on PDT. So I don't know if we have any questions so far. I don't know if we have any questions so far. Any questions so far? Any question? Do we have any question?
Hello.
Yeah, I can hear you. Go ahead.
Hello. Yeah,
So,
my question
I,
is okay.
Okay, please come in. Let's go one after the other, please.
All right, my question is based on the book that is related to psychological aspect that you can recommend.
Okay, the psychology, market psychology, the psychological aspect of
Yes.
trading. Okay, I will search for. Just try to remind me tomorrow evening. Just try to remind me
All
tomorrow
right, sir.
evening.
Thank you.
I will look for a book related to the psychology of trading, and then I will recommend it to you.
All right, sir. Because I can say I'm lacking in terms of being a disciplined trader. So
Yeah, and the obvious truth is that nobody can teach you that aspect. If we must be truthful with ourselves, nobody can teach you that aspect. Being disciplined as a trader is something you learn over time as a result of losses and ups and downs in the market. But at least with little uh readings, you can actually brace yourself up.
because I don't know why I always break my rules. So
Don't
that is
worry,
why I
with
think
time,
I need that. All
with
right.
time. So any other
Thank you,
question?
sir.
You're welcome.
Yes, sir. Yes, sir.
Okay, go ahead.
Okay, so in some situations, I've noticed that maybe you might have two zones. Let's say, like on BTC now, we have
Yeah,
two zones. We have
yeah,
two zones before the rejection,
yes.
of the most previous zone.
That is this one over here.
Yes, we have two zones,
Yeah,
and we're clearly in an uptrend right
yes,
now.
yes.
So, what about the situation where that rejection candle?
That is this one.
No, the other one. The
This
other
one
one.
here. Yeah,
Yes. Let's say this candle didn't reject this zone. That's the
yes.
first rejection that happened. Let's say it didn't reject on that zone. No,
This
the
one
one
over
to the
here.
left. The one
This
to the
one.
left. Yes.
Okay.
Let's say that rejection didn't happen.
Didn't
It's
happen.
just the zone. It's just the zone.
Okay.
So we have two zones. Then the rejection candle that closed on the first rejection.
That is this.
That one
Okay.
closes below the second rejection. Closes below the second zone.
That is, it closes below this zone here.
Yes, no, it closes below the one below it.
This
Yes,
one.
it closes below. Yes.
Okay.
So let's say that rejection candle rejects the second zone.
That is, it rejects this
That
zone here.
means it rejected both of the zones.
Both of the zones.
Yes, to the left.
Okay.
Zone 1 and zone 2.
It rejected this zone and this zone.
Yes.
Okay.
Then it closed above them.
Above them. Okay. What do you
Yes.
do in a situation like that? Is that your question?
Yes, that's my question.
Okay.
That's my
It's
question.
very easy. All you just have to do is to go to 1 hour to map out where the BMS happen. Remember, in an
Okay.
auction, you're looking for the high before rejection. Okay, let me show
Yes.
you. Let me quickly show you something. We'll have about 7 minutes to go, but let me quickly show you something. If you consider this zone now, this is a rejection point. So let's say this is XZ. This is XZ. And if you look at our rejection happened here. Our rejection happened here. So let's go to 1 hour. Let's go to 1 hour. Let me show you something. Remember, this is where our rejection happened on 1 hour.
Yeah.
On
Yeah.
4 hours, sorry. So we look for the highest point with 4 where rejection happened. So this is the highest
Yeah.
point over here. This is
Yeah.
the highest point before where rejection happened. So this rejection, this is the highest point. In the issue of BMS, we don't consider this wig as a BMS. We don't consider this as a BMS. So this is where BMS occurred. This body
Whole
candle.
body
Yes.
candle closed.
Exactly.
Yes.
So this is where the BMS happen. This is where the BMS happen. So now, in a situation like that, you go for where rejection happen. You mark out the zone, but also once you see that 2 zones were rejected, if you see that 2 zones were rejected, you watch out for where the BMS will occur.
BMS.
Definitely, there must be a
Okay.
high. There must be a high.
Yes.
Before, and then scenarios like that, you can see that one of the high might be broken with wig, but you look for where candlestick break is. Do you get me?
Yes.
If you look at now, we didn't take this wig
Yes.
as the BMS, we didn't take this wig as the BMS, we took this candle body.
Yes.
And that was what pushed
Candle
us
close.
to our analysis that we had in the morning on BTC. But since price didn't come to it, because this was the OB, but this OB was too big for entry, even though price tapped into it. And that was why I refined to 5 minutes. And that was why I
Yes.
refined to 5 minutes. What is happening in my network? Okay, this is on 15 minutes. This is on 15 minutes. And then this was all the move that generated. So this was where I was expecting BTC to drop to. And I still have eyes around here. So I'm taking this, I will assume this as a liquidity pool over here. So I still expect that price might come
We'll come back.
and then
at some
tap
point.
into our entry of the analysis
Yeah.
that we sent on WhatsApp in the morning. So that's what you just do. So you just look for the highest point before rejection. The highest point before rejection, and then you mark as your break of market structure. Hope that is clear.
Very clear, sir. Thank you very much.
You're welcome. So any question? I think we just have less than 5 minutes now. Any question?
Oh, sorry. One more question, sir.
Okay.
You spoke about the prop firm.
Yeah, the prop firm. From a lot of review that I'm getting, a lot of people are just. The thing is that tonight I'll do a proper research, but my mind is still on Maven. So, but I'll do a proper research on Maven now, and then, guys, tonight I'll do a proper research on Maven. So I'll give us heads up tomorrow, and then by Monday, for those that want to start getting it, I'll start giving directive for us to get it. And those that are doing personal funding, they can also do it, and then we'll go ahead. But remember, our focus is just on a pair. So we're putting the reef aside for now. So for this first quarter of this year, we're focusing on gold, BTC, on gold and BTC. That does not mean we won't trade other pair. Like people who have multiple accounts, you can still be trading your deriv and then others. But the main focus this year is gold and BTC, since they really respect the 4H and 5 minutes pattern. Hope that is clear.
Yeah, thank you very much, sir.
You're welcome. So please, any further question can come in the group. I will pin the recorded class, the recorded section now on the group. So everything will occur on Telegram since the WhatsApp group is becoming like a playground. So let's just focus on utilizing the Telegram. Most times, if you send too much of message, you miss important things on the group. So most vital things, I'll just put you to the Telegram group, to the WhatsApp group. So our chat and the rest can come on the Telegram group. Thank you very much and have a blessed night rest.
Thank you, sir.
You're welcome.